Welcome to the Slop Farm. Enjoy the video.
In this video, I will explain how to make a stock research report. First, clearly define your investment goals and risk tolerance. Are you seeking long-term growth or short-term gains? Next, identify industries and companies that align with your interests and investment strategy. Finally, gather essential financial documents such as annual reports, quarterly filings, and investor presentations. These documents provide crucial data for your analysis. Now, let's dive into fundamental analysis. Examine the company's income statement, balance sheet, and cash flow statement. Look at profitability metrics like net profit margin, aiming for consistent growth. Evaluate valuation ratios such as price to earnings and debt to equity to understand the company's financial health and market value. A healthy debt-to-equity ratio is often below 100%. Beyond the numbers, qualitative factors are crucial. Research the management team's experience and track record. Identify the company's competitive advantages, like a strong brand or unique technology. Understand the broader industry landscape, including market size and growth prospects. Finally, identify potential risks and opportunities, such as regulatory changes or new product innovations, that could impact the company's future performance. To conclude, synthesize all your findings into a clear investment thesis. Based on your analysis, formulate a recommendation: buy, sell, or hold, providing strong supporting evidence for your decision. Structure your report logically, starting with an executive summary, followed by detailed sections on financial analysis, qualitative factors, and risks. Ensure your report is concise, typically around 5 to 10 pages, and easy to understand for your audience.
Thanks for watching. Consider subscribing if we helped you today.